You are listening to Financial Survival, sponsored by Discount Gold and Silver Trading. It is May 11th, 2009. And again, thank you for listening to the program. I am Melody Cedarstrom, and we are here with Robert Chapman of the International Forecaster. But first, let's go and see what the precious metals are doing. And if you have any questions for the program, you can email us at discountgoldandsilver@yahoo.com. discountgoldandsilver@yahoo.com. You can use that for all your gold and silver coin question and investments. You can use that email and, of course, questions for the program. So get them sent over to us. And we are looking at gold down 320 at 914. Not a bad day. Silver, not up, but silver is down 4 pennies, 13.99. Platinum is down $30 at 11.27, and palladium is also down 5 at 2.39. So both the gold and silver were off their lows of the day, and pretty much a mixed bag everywhere else. So take a moment to visit our website at discountgoldandsilvertrading.net. You can listen to the programs on an archived basis, on a weekly basis. And remember, folks, send us your questions today by email. And we have Robert Chapman joining us from the International Forecaster. And if you'd like a complimentary issue to his newsletter, give us a call or email us. Good afternoon, Bob. How are you today?
I am pretty good. I'm just getting the numbers here. Looks like we're going to close. Probably get a little bit more coming in here. But so far, I would say for 2.5 hours, gold's been from even to a minus 120 in the outside month, and silver's off 2 or 3 cents. I think the government sat on the price today. I don't think they're interested in driving it down, but they wanted it to stay where it was. They put all their firepower into trying to get the stock market up, and they were woefully inadequate. 84.17, down 156. S&P was down the equivalent of 180. And NASDAQ was down the equivalent of 47. But you got to remember, on Friday, the Dow was down 66, and NASDAQ was off 131. So that's about 70 points. So we add 70 to 47, and you come up with about 120 on the downside. So it's pretty much balanced out. I think the market's going lower here. It's not going to plunge. It'll go down a little bit at a time, and that's good. Bad for the people who are long in the market and really should be getting out of all the stocks in the market, with the exception of gold and silver shares. Because this is the last chance, I think. And, you know, you've had a 40-35% run here, a rally in a bear market from 66 to 8,500. And it's the same kind of rally, not quite as strong as the rally in 1932. And even on a technical basis, it's going down. I don't know that you always have to test a potential support area. And the support area is 6,600. So it's going to get down there and test that. How long it'll take, I don't know. Whether it'll all go all the way to 6,600, maybe it'll go to 67 or 67.50, but it'll be close. That's the way markets are. They want to be assured that that's support. If it goes to 6,600 and doesn't hold, well, the market's telling you that there's even worse problems than what you imagined. Of course, today we have the experts telling us that everything's going to be just terrific, and we're going to turn around, and this is the end of the recession. Nobody talks about depression. we are in a depression. We started there in February, and the market's going back down. The economy's going down. It's not going to go down. The economy's not going to go down as precipitously this year as it should have. We have the stimulus. That stimulus package will only, if it does at all, enliven the economy June, July, and August. May, June, July, primarily. And after that, forget it. And I just got a survey in this morning, and it shows that 90% of the people are going to take 90% of their money and pay down debt. So it's not going to get into the economy. It may get into cash flow of the companies that are debt-borne, but it's not going to be purchasing things. And, of course, that's what happened last time to a lesser extent. And that's what's going to happen this time. Gold and silver shares were mixed today, mostly off fractions, nothing serious. The economy on a GDP basis is minus 6.3% last quarter of last year. First quarter of this year, minus 6.1%. I guess second quarter, minus 5%. Third quarter, minus 4. Fourth quarter, minus 4. Next year, minus 3, minus 2, minus 1, even, because that's when the majority of the stimulus plan goes into action. And so it'll be kind of a flat year. But at the same time, with all the monetization going on, and that monetization is now going on very strongly in England, and the European Central Bank announced today that they are going to start going into the market and buying debt instruments, treasuries, whatever they're going to buy. I think it was $80 billion. And the Germans are furious about it. They don't want to do that. That's a Bundesbank. And so I think we may be looking at another nail in the coffin of the Eurozone, because Germany's really put off about this. They don't want to do it. And their economy is in the best shape because they didn't do what they're not supposed to do. They did what they should have done. And France did to an extent, Holland, but the rest of them are in the soup, more or less. And so there are other ramifications to that. Word is we're going to spend through the Federal Reserve $1.2 trillion to buy treasuries, agencies, that's Fannie, Freddie, FHA, paper from government as well as in the market, and also toxic waste, collateralized debt obligations. And these CDOs are virtually worthless. I mean, anything under 25 cents on the dollar is worthless. So, anyway, that's what the situation looks like. And there's no recovery. I just had a question on Crosstalk, the Christian radio station. What am I supposed to do? I've got 2 kids, and am I going to be unemployed? And I said, yes. You are going to be unemployed. And maybe you're not, but your chances are pretty good. And they weren't too happy about that. But I think that's the way it's going to be. So that's where it's all headed. Got some questions here today. Incidentally, I'm coming out on Wednesday in the International Forecaster piece on the Federal Reserve. And I know when I write something really good. And this is really good. And so those of you who are not subscribers, please get a free introductory copy. It'll be on the email version only for the moment because it runs around 6 pages. And